One of the things I wanted to ask you about, Jim, is I read you tweeted out something that was kind of fascinating. You said that you hope that the Canadian economy doesn't follow the American one. You said that would be a mistake. And you said the reason for that is the Americans have a more diverse economy, whereas Canada is basically dependent on real estate and energy. And then
Yep.
I saw someone else tweet on this out. His name is Daniel Folk. I don't know if you know him, but he said the real estate problem is this is one of the biggest challenges facing Canada's economy right now. He says there are billions of dollars in unrealized losses in the condo pipeline that will be absorbed by retail investors. And he said a lot of buyers don't want to take possession of the units they committed to purchasing, and just as many can't afford to. And he said, the government, he's suggesting the government would be very wise to get working on some sort of CMHC or a similar program to get unsold inventory product into the rental market. So that's an example of uh, one of the things that I don't think people realize is going on in Canada in terms of how interest rates and things like that are impacting, home ownership, and how important that is to the economy. Do you agree that this is a huge problem going on right now? And how does this fit into this big housing crisis, housing shortage that we hear so much about, especially from the federal government?
So the Bank of Canada's they're already cutting. We got 50 beeps cut, right?
Yeah.
They're going to have to cut further. We may not like I'll give you a glass half full. We may not like how the prime minister did it.
Hmm.
Okay. Uh, but, you know, at growth in population and immigration supports the housing market,
Right.
right?
Yeah.
Um, there is no doubt in my mind, and I'll be specific globally, that there is a lot of assets on financial companies' balance sheets that are trading underwater. That if they mark to market, if they had to basically sell it and actually take instead of what they bought it for, there would be a lot of insolvencies. Right? There's no doubt in
Mm.
my because they're bankers. I work for bankers. Right? They
Right.
all think the
Right.
same. They all do the same trade.
Hmm.
Right? And so I am very constructive on the fact that I think they understand that. I think they're going to cut. I would expect the Canadian the Canadian real estate market to do okay, right? I
Hmm.
would expect, uh, uh, you know, the way I view it, Leighton, is we are still in this adjustment period coming out of COVID. Nothing's
Mm.
been done. So we got an air pocket going out to 25, late 25, 26. We got an air pocket staring at us. And so what I would say to you about the condo situation, as you brought up, well, it's location, location, location. First off, we went through this in the late 1980s when it wasn't Mr. Macklin, it was John Crow.
Hmm.
Okay, we went through it. Real estate prices had a major correction, and then they came back. Um, I do not think that's going to happen. And the reason why I think that is we've got millennials heading into family formation years. We've got to get inflation, we got to get interest rates down, right? And then we've got to see how the market settles. So
Hmm.
my whole argument would be, and they don't listen to me, right? Like I got no, I've got, I'm just yapping away. But to me, is the real risk is look at what's happening in China,
Okay.
right? And the real risk is that we're going to replicate what happened with Japan. Interest rates are going to go back to zero,
Mm.
right? And so, what does the real estate market look like in a low interest rate environment? So, the way I look at it is I think there's going to be a soft landing in the United States. I think we're in the early phases of AI. And I think Canada Canada has a big restructuring to go through because they are. It's a look at. Let's be honest, rightly or wrongly. This is what I try to say. Let's make don't make a comment about Mr. Trudeau's policies in the sense
Hmm.
that he was elected, he made a deal with the NDP, irrespective of whether I like it or not. They have put forth a policy that basically has targeted the energy patch
Right.
as being no growth. Okay,
Hmm.
rightly or wrongly, right?
Hmm.
So the way I try to simplify it down is the fact that it really comes down to, what happens after the next election, which is going to be in late 25, right?
Hmm.
However, let me be qualifying here, right? Because now we got to talk stocks, right? So that's the fundamentals, right? And it's
Yeah.
you got you got the stock market over here, and you got the economy. Look, I want to be. I think Tiff Macklin knows what he's doing.
Hmm.
I think they're going to cut rates aggressively. Uh, the inflation shock is over. You asked the very pertinent question: what does the real estate market look like
Hmm.
after we get down to, let's say, 2%? Right? Question mark. As you get older, you ask more questions. I think they're going to make sure that they do what they need to do so that the system doesn't blow up or too big to fail,
Hmm.
right? And I honestly think, if you want to think about it, if that's the case, then if and I'm out of Canada, right?
Hmm.
My big call for the last couple of years is get the hell out of Dodge, right?
Right.
Nobody, they don't know what they're doing. I'm not arguing. You got the home biased up here. Average Canadian has 53% of their assets in their RSP in Canada, should be closer to two. If we were managing money in
Wow.
Europe or in New York, Canada's about two in our global asset allocation. So but could we have a nice counter trend rally in Canadian banks? Yes,
Mm.
because Tiff's cutting rates.
Hmm.
If Tiff's cutting rates, sorry, if Mr. Macklin's cutting rates, there is a belief that the pertinent risk that you have brought up is taken care of. Well, I'm
Oh,
not so
okay.
sure it has been, right?
Interesting.
But do you want to make a tactical trade for
Mm.
6 to 8 months? And it's not going to be Royal, because everybody's piled into Royal. Is it the other banks that have lagged? It's the
Mm.
same thing with regional banks in the United States. That's why small cap value is ripping right now,
Hmm.
right? Because the market is positioning themselves for what? The Fed is going to cut, the Bank of Canada is going to cut, and it's going to be fine. What happens in the back half of 25, right?
Hmm.
What happens when they're too late and they realize that rate cuts aren't the magic elixir,
Hmm.
right?
Hmm. One of the things
There,
that,
there, your
yeah,
narrative. Then your narrative comes in, right? You know what
right.
I mean?
Yeah. Yeah. Um, in researching you, I want to tell people about really wonderful writing that you do on market insights. And each month you produce a different piece. And I'm just going to mention a few of them. Uh, the one in July is about navigating the dual revolutions. June is about the grand chessboard, which you've sort of been talking about a little bit here. In May, out of options. The two I'm really interested in getting you to talk about is the one you wrote in February that's called Insights, called Trump's Shadow. And there's a really cool video here on that one. I really enjoyed watching that. But you talk about echoes of history and financial markets in a post pandemic world. Could you tell us a little bit about that piece and why you wrote it?
I wrote it because if you go back in history and you view the United States like an empire, like the Roman empires,
Right.
right? There's a
Hmm.
question about, can these empires, can these countries, or can these companies, after they've had a growth phase, can they make the decisions that are required to maintain growth?
Hmm.
And very few have. Like Japan didn't. Doesn't look like China is. But it seems like the Americans are. And if you go back a couple of decades ago, the United States was at the abyss, right? If we were talking in '05 and '06 and I was in the States, we would the pitch would be completely different. Get the hell out of the United States. They don't know what they're doing, right?
Mm.
John Maynard Keynes in Bretton Woods in 1945 was negotiating with Harry Dexter White, who was the American, the key negotiator, and he basically said this. And this goes back to Larry Summers and Ben Bernanke, and it's all there, right?
Right.
He says what happens is Keynes said to the Americans, "You shouldn't use your dollar as the medium of exchange." Basically,
Mm-hmm.
and the reason why is there everybody is going to devalue their currency against your currency. That means their manufacturing is going to be cheaper than your manufacturing. And then what does that mean? That means you're going to go from a creditor nation to a debtor nation. Your standard of living is going to fall. Okay? And when your standard of living falls low enough, you're going to have a rise in populism.
Mm.
That happened during the US Civil War. That happened at the beginning of World War I. And when you get the rise of populism, well, this is what we're living right now. So
Yes.
what did Trump do? Trump went in like a CEO into a corporation, new CEO into a corporation that needed to be shaken up. I call there's a guy named Al Dunlop or Chainsaw Al Dunlop. You would bring him in to go into this old company and to shake things up to try to get the economy back on a growth trajectory,
Mm-hmm.
right? That's the Trump shadow. So whether or not you like this guy or not, right? And so what I would do, and this is where it gets crazy. All I'm saying is Trump is just implementing or doing what Keynes called in 45,
Right.
right?
Mm-hmm.
I'm not a Trumper. I'm a strategist, right? I'm saying Trump, Keynes was right. Keynes' prophecy came to pass, right? And then the United States had to change.
Yeah.
We're in a secular bull market.
Mm.
Invest accordingly. Educate yourself. Do not be the dumb money at the poker table.
That's a great way to end off. I have to say, of all the guests we've had on the show, more than 200 episodes, I don't think we've had one with more gray matter or anybody who's making greater use of it. We're talking about you, Jim. So thank you so much for this hour.
Anytime.
This hour with you, just a brilliant conversation. I've learned so much just researching you, but even more so during this conversation. So we're very grateful for your time and for your wisdom. Thank you. Thanks very much for being our special guest here, Jim. We hope to have you
Anytime,
back.
guys. I really enjoyed it.
Yeah.
Cheers, guys.